What's up, everybody? Welcome to another episode of Swan Signal Live. I'm your host, Sam Callahan, Senior Analyst at Swan Bitcoin. Before we get into today's show, I want to bring up some of our sponsors, the first being Marathon Digital Holdings. Marathon is the largest and most technologically advanced publicly traded Bitcoin miner, as well as the most energy efficient. Marathon's primary mission is to enhance the Bitcoin network sustainably by increasing the amount of hash rate, and that helps make Bitcoin the world's most decentralized and secure monetary network. So go check out Marathon Digital Holdings. Also, obviously, this is brought to you by Swan. Swan has a nice promo going on. The first $10,000 are no fees for all the Bitcoin you stack, as well as your next 10,000 if you're an existing Swan user. So now's the time to stack some sats for no fees. There's nothing better than free, no fees. So go check out Swan, as well as Pacific Bitcoin. We put on the festival every year in beautiful Santa Monica. That's October 18th and 19th this year. We got a great list of speakers, workshops, satellite events, parties. Go check it out. It's my favorite. I'm kind of biased, but it's one of my favorite conferences of the year. Can't really beat Santa Monica in October. So go check it out at pacificbitcoin.com. If you use the promo code Signal, you'll get 10% off. And if you use with Bitcoin, you get an additional 21% off. So 31% off your tickets if you go to Pacific Bitcoin and use that promo code today. So today we got a very special guest, my dear friend, Trey Sellers. He's the VP at Enterprise Sales at Unchained. We're going to be talking about all kinds of things, including the landscape of custody solutions, as well as current developments, as well as the FIRE movement. And can't wait to talk to Trey. So let's just bring him on the show right now. Trey, what is going on, my friend?
What's up, Sam? Great to see you, man. Great to be with you.
Yeah, so I thought it'd be fun to kind of go through your background, kind of the typical podcast start, because you are a banker turned Bitcoiner, which is always something that kind of raises eyebrows a little bit. How does a banker become a Bitcoiner? There's usually those people are usually hostile towards Bitcoin, at least over the years. I mean, it's kind of changed a little bit here. But why don't you tell us your story of how you fell down the rabbit hole?
I think it's starting to change, right? Like these bankers and the traditional financial world can't help but take notice at this point. You know, with the ETFs, the political landscape is shaping up to be a little bit strange when it comes to this stuff. Maybe we can get into some of that.
Mm-hmm.
But yeah, I came to Bitcoin from the Libertarian side of things, and so I think, you know, as I was coming up in my career, that was a common thread in the way that I've always thought about things. I joined the working world in 2008, right at the midst of the financial crisis. I found Ron Paul and was really intrigued by that. And so that like sound money principle was always kind of deep in my psyche there, and something that I just grew into understanding and really gravitating towards. So my background is pretty broad across finance and technology and consulting and banking and finance. And I've worked with some very large institutions, Goldman Sachs, Deloitte Consulting. Before joining Unchained, I was at Truist in the capital markets business doing risk and P&L work. And it was there that I kind of started venturing into being a little more public about my support or liking for Bitcoin and that kind of thing. And I built a deck I called Bitcoin for Bankers. This is around 2018, 2019, when we were heading into 2020, and I kind of saw the writing on the wall for the halving coming and what we all expected to happen, which turned out it did happen, a big bull run. And, you know, I kind of thought to myself, like, hey, I'm down this rabbit hole. I understand this at least to a large degree and much better than the people around me. And these people are going to start asking questions. So who better than me to be in a position to answer them? So I put this presentation together and was shopping that around. And, you know, in the midst of the bull market, there was a lot of interest, you know, from around the bank. And I was actually pulled into a crypto working group as the Bitcoin subject matter expert, as the board of Truist, this very large bank, because I think it's the 6th largest bank in the country right now. Was starting to ask questions about, you know, what does the landscape look like? Should we have a strategy? If so, what should that strategy be? So I was honored to be able to provide my perspective on why Bitcoin only, why Bitcoin first, to this group of executives who are really just starting their journey and trying to figure out all this stuff. They didn't get it at all, right? It's exactly how you would expect it to go. But proud to say that I was there and helping them at least get that perspective that they otherwise wouldn't have gotten.
Well, not a lot of people can kind of speak their language, I would say. And it kind of takes somebody who's worked in the industry to be able to deliver that Bitcoin message in a way that resonates with them. I think you got to know your audience. So I think you were probably the perfect person to do that. But in 1819, I mean, that was early. I mean, I just remember during the 2017 bull market, even had like Goldman Sachs come out, and I think that was like a trading desk, but then they closed it during
Yeah.
2018, 2019. They kind of went away and then they came back. But you're right that now it seems like things have changed and they're kind of taking it more seriously. So, do you think it's really around these ETFs? Do you think it's around the regulatory updates, or the politicians? Like, what do you think's the big shift right now? And why do you think it's happening now as opposed to when you started to get into it where it seemed obvious to you?
Yeah, I first bought a little Bitcoin in 2014. So it's, much earlier even than that 2017,
Mhm.
2018, 2019 timeframe. And I remember going through that cycle and, I really didn't know what I owned either. So, these institutions, they just take a long time to actually get up that learning curve. I think when Goldman came out in that 2017 timeframe and said they were going to have a trading desk, like they didn't have any conviction. They saw or smelled some fees, which I think is part of what is driving, or maybe the primary driver for these ETFs. There's not a lot of like ideological conviction there. Of course,
No.
they are looking for a way to be involved in something that has now established itself as not going away. I think the biggest driving force that Bitcoin has, aside from the value of it consistently rising over time, is just the fact that you can't kill it, that it's always there. It always rises from the ashes like the phoenix. And when you see that multiple times, when that happens multiple times in front of your face, when you've been somewhat paying attention, there's no way you can ignore it. And so, as the market cap of it gets bigger, as the liquidity profile of Bitcoin gets bigger, it's a Veblen good, right? There's more demand, the larger it gets because it's a money, and that's how money operates, right? This network effect allows more capital to come in as more capital has already come in, and it kind of feeds on itself. And so that's what these institutions are seeing, something that hasn't gone away, something that has massive interest across their client base. They're hearing from their clients, right? They wouldn't be doing this if they weren't. And so if they see an opportunity to engage in the network and build out new products and services that will keep their clients happy and keep them coming in the door or staying in the door, they're going to do that. It's all about that incentive structure.
Yeah, Bitcoin aligns those incentive structures. I feel like that's such an important point that these institutions just respond to client demand, which makes me bullish because I always think of Bitcoin as more like a grassroots movement. And the same thing with the political developments. They're fighting for votes, but why do the voters care so much? It's because they care about Bitcoin. They care about this new technology, and that's kind of shifting politics overhead. But when
It's the game theory playing out like that we
yeah,
see in all different microcosms, right? If you don't adopt Bitcoin, your adversary or your competitor will, and if they do it before you do, now all of a sudden you're missing out on this massive flow of business that you otherwise could have had you been a little bit more open-minded or
yeah.
intellectually curious or willing to go out on the ledge just a little bit, to stay in front of
Well, how about
some emerging trends. You know what I
yeah,
mean?
I mean, how about Vanguard too? I mean, that's another perfect
Right.
example. They took a philosophical stance, I say, against Bitcoin, and I don't think they're going to like pivot necessarily. Maybe soon. I think people think that they just hired BlackRock's former lead ETF. I think in the long run, they will definitely have to bend the knee, but we'll see if it happens. But they actually saw so many accounts close when Bitcoiners left in droves to Fidelity and the others that are more accepting of Bitcoin and building for Bitcoiners. They saw so many accounts leave that they now charge $100. They're like, well, we
Yeah.
might also make some money with these account closures.
Yeah, it'll be interesting to see how that plays out. Like, I'm
Yeah,
not sure they won't pivot and at least start supporting it on their platform. I don't understand how you can continue
I don't
along
think
and just pretend like, oh, this, trillion, 2 trillion, 5 trillion, $10 trillion asset that all of your clients want, you're not going to give it to them. It just doesn't make sense. Like, I could understand the argument for saying, oh, we're not going to like actively push this or market it, okay, that's one
Yeah.
thing. But like to just not have it on the platform at all makes no sense.
But
Vanguard is interesting for me because there's a huge overlap in Vanguard and the Bogleheads and all of that when it comes to the FIRE movement, which we can get into in a little bit. But
yeah.
a lot of the FIRE proponents that are out there are they're looking for stock market index funds that are just going to track the market. You're just essentially stacking stocks instead of stacking sats, and you do this over a long period of time. And you want to find the one that has the lowest fee. Well, the lowest fee has typically been Vanguard. They've been like very fee focused to drive that down as low as possible. And so anyway, it just an interesting like corollary or overlap
well, yeah,
between
let's dig into
those two
that.
topics.
Yeah, because Vanguard, I mean, the CEO at the time said, we're not going to support these Bitcoin products because they don't belong, in our opinion, in long-term retirement portfolios, which was really ironic to me considering that Bitcoin is, the best performer over the last 10 years and really since its inception. Over longer time frames, that's when Bitcoin really shines. But they're saying it doesn't belong in a retirement, and so it's really confusing maybe for somebody who's like, wait a second, do they not care about the data? Do they not care about the returns? Um, what do you say with that, and what do you say with the FIRE movement, with who
Well,
looks at Bitcoin, who also have been kind of like standoffish with Bitcoin, right? They haven't really accepted it yet, right?
yeah, there's this conflation between investing and saving, and the FIRE movement intuitively understands that the money is broken and that they need to invest, as they say. They need to like stay ahead of that inflation that's happening or that debasement of their purchasing power over time. They intuitively understand this, which is why they are advocating for save as much as you can, invest that money in a stock market index or real estate. A lot of people like, um, and but they're not like actually investing. When you buy the total stock market index, something that is essentially giving you exposure to the entire stock market in the US or maybe across the world, you're not you're not investing there, right? Like you're not doing some type of deep analytics or analysis on a company's balance sheet and their revenue projections and their debt to equity and all of this stuff that you would normally associate with an actual investing strategy. You're just saving money, and you're doing that in a vehicle that has proven over time to at least meet the constraints of inflation and that hurdle rate that you need to get to. And in the U.S. has really outpaced it to a significant degree. Like if you are doing a traditional FIRE strategy and you're saving and you're buying the stock market index, you are probably going to beat inflation and end up in a lot better position than if you had obviously just sat on cash. And so that's why they propose that. But it's this conflation of thinking of that as investing versus savings that I think people just don't quite understand, that they're not approaching this in the right way from a thought process perspective. If you start to think of that not as investing but as saving, now all of a sudden Bitcoin makes a lot of sense in that framework for FIRE, because that's what you're doing with Bitcoin. You are saving in a money that does not lose purchasing power over time, that cannot be debased, and that is ultimately engineered to go up in value, similar to the way that the stock market is. It's just in this case, you're completely constrained in the supply side of it, so you can get a lot more convexity in the way that trade works for you.
Yeah, we should probably note what FIRE stands for, right? It's financially independent, retire
Financial
early,
independence, retire early. Yeah.
right?
There've been a lot of these proponents out there of the FIRE strategy. Mr. Money Mustache is maybe the most famous and kind of the first who, wrote a blog about this. Must have been 15, 20 years ago. And, really effective way of conveying a lot of these concepts where you're essentially, you're saving money that you would otherwise be spending. You're investing that in assets to take advantage of the compounding effect that you get from investing those assets and building up a nest egg that's large enough for you to retire and not have to worry about money is essentially it, right? And there
Mhm.
are ways to approach this. You're very much thinking in an intentional way about the money that you are spending and what you're spending that on and how much value you're actually getting out of your life. So there's a lot of really good concepts built into this methodology. But historically speaking, the FIRE proponents out there have not been too receptive to Bitcoin. I think some of that is coming around. Like, again, same thing with Wall Street. Like, if it's there for long enough and you see it rise from the ashes again and again and continually outperform whatever you've been investing in or saving in, you have to take notice of that. So I do see some signs of that ship turning a little bit. But then again, it's like Mr. Money Mustache, hate to call him out, but he did write a blog post in 2018, kind of right at the top of that bull run, that just said why Bitcoin is stupid, right? And he gets all the normal FUD around it and speculative assets and this and that. But it doesn't look so stupid anymore when it's 70,000 and, you know, has outperformed anything and everything that you've been doing, man.
I think the concept of investing versus saving is so important to understand as well, because it's a function of the broken money, right? People don't realize that like equities or stocks are actually, they're considered like a risky asset class, right? You take risk when you invest in these companies that might not exist with something like Bitcoin, like such as business risk, right? Like literally you depend on like how the company is managed. There's competition from other companies in that specific sector. Whereas Bitcoin is a form of money. And so like to view that as savings versus investing, I think that's such a key point that may be lost on a beginner or somebody who hasn't like familiarized themselves with these concepts.
Yeah. Again, people think of the stock market as an investment vehicle. And when you are analyzing a particular company, that is investing. Like, you're looking at the key metrics that would allow you to make a decision as to whether or not allocating this capital to invest in that company is going to be worthwhile, and whether you're going to, you know, gain from that or take a loss from that. And then what plays out will determine how good your decision making was, or how well you were able to discount the future cash flows of that business and be able to anticipate any kind of headwinds they might have, or regulatory issues, or natural disasters, or whatever the case may be. I think
the index is a little different though.
The index is different though, right? Because you have taken away that particular risk around a specific management team, a specific company and their capital structure. All of the risks that are associated with an individual company don't necessarily exist for the broad index. So, and again, on the flip side of that is, that's why you should be thinking about this as a savings vehicle, not an investment that you're making there. The risks that are associated with an index fund are more about just the volatility. When you need that money later on in your life, and you are retired and you're trying to like draw down on that capital or live off of those dividends or whatever it is, what is the value of that asset that you have? And Bitcoin has this very similar risk, at least right now, when most of our expenses are denominated in dollars. If you were to retire now at $70,000 Bitcoin, and then the price gets cut in half to 35,000, and it stays there for a couple of years, we call this sequence of return risk, right? So it might ultimately go much, much higher from there. But if you need that cash now because you need to sell the Bitcoin now to fund your expenses, that is a risk that you have to take into account with how big you need your portfolio to be, or your savings assets to be, in order to sustain that retirement that you've worked so hard for. Otherwise, you may have to come back to work. You may have to develop another income stream to supplement that retirement, which is not necessarily the worst thing in the world, but it's something that everybody has to be aware of as they're planning for their financial future.
Yeah, and that's why people there's a lot of risks to bonds right now, and they've really, got hit pretty hard the last couple of years. But that's one thing that bond offer, like retirees to plan out into the future. That's one of the things why people use them so much. If you know that you need to have a large expense, like pay for your kid's college in 5 years, sometimes you'll just buys like a bond that matures over that time frame, so that you're going to have the money there to like pay for that expense. Same thing with like dividend yielding stocks or things like that. That's when those certain assets can be kind of beneficial, I'd say.
Yeah, a lot of this is about like matching your revenue streams from an investment versus the expected expenses that you have. So, if you've got a mortgage that's at 3% and you've got cash that's yielding 5% or whatever, you're, technically in like a positive cash flow situation there when you're getting 5% and then paying out 3%. But, one side of that might have a floating interest rate versus a fixed interest rate. So there's a lot of different factors that are involved there. I would never own a bond,
Right.
personally speaking. Like in my mind, the way that I approach this is if you are thinking about retirement and you're thinking about what you need to be saving to build a portfolio of savings assets like stock index or like Bitcoin, you need to be thinking about the value of that portfolio and not necessarily like the income that you're going to generate from it, because there are a lot of different ways that you can fund your retirement. And it's not the worst thing in the world to actually sell down some of the principal of doing that. If you can avoid doing that for whatever reason, and you're taking advantage of cheap debt or something like that, like, be wary of that. But it can be a tool that can help you a lot. In my mind, it's much better to have a much larger, portfolio of assets that you can draw from than to have a smaller one that is providing dividend income or something like that.
Yeah. No, I agree completely with that. Let's maybe pivot a little bit to kind of the developments over the last couple of weeks. There seems to have been a large political shift, I would say, between the two leading presidential candidates. One was Trump, who in Mar-a-Lago was suddenly asked some question by some NFT bro, and that's what kind of sparked this off. And he said, you got to vote for Trump. And then that was in stark contrast to the Biden administration, who over the last 4 years, you could just describe that they've been hostile, at basically every turn. From their executive order, where they ordered federal agencies to look into rooting out illicit activities and doing research on the industry, to the emergency data collection on Bitcoin miners that was proved unlawful. I think their budget proposes a 30% energy tax on miners. Those are just some examples. And then obviously he appointed Gary Gensler, who's also was basically dragged kicking and screaming, approving these Bitcoin ETFs, had to do a lawsuit, still haven't approved options trading on them. There's SAB 121 rule, which prevents banks from custodying the assets, and that was just overturned. There's just example after example of the Biden administration being hostile. And suddenly Trump comes out and they just completely pivot. And it seems like they basically tapped Gary Gensler on the shoulder and said, we got to throw this industry a bone because we're about to lose a ton of votes. So that's
it's been incredible.
Yeah, that's
it's really strange. I gotta admit, I did not see this turn of events happening. Trump has been outspokenly against Bitcoin in the past, and always praising King Dollar, which you would expect from the leader of the country that's issuing that currency. You want to protect that at all costs. But the way that this has played out has been very strange to me.
Mm-hmm.
I agree. It does seem like Gensler got a tap, that the Elizabeth Warren wing got a tap. We can't be doing this anymore because Trump came out and just laid down the law. This is the way we're going. And to see how reactive they were to that. They really feel like this is a threat to their chances of keeping the administration in place or keeping the Democrats in power, and that they have to react. I don't know. What do you think? Do you think that this is going to continue like this, or is this a little flare up that will eventually subside? Do you think Trump is going to continue to come out and talk so well about Bitcoin and be on that side, the right side of history?
Well, I think Trump likes a lot of attention personally, and there's nobody louder on social media and X than the quote unquote crypto Twitter universe. I think there was studies that how much activity they have on X. It's the number one community, I think. And so I think he's going to find that like, whoa, I just tapped into something here. And I think you are going to see more of that because, I mean, there is 50 million estimated US adults that hold some kind of cryptocurrency, and with the most of that probably being Bitcoin, being the leading crypto asset. And obviously we have views about Bitcoin and everything else, but that's just the reality. And so I think they see this as just a way. And you look at like key swing states, actually the ownership is higher in these these key swing states.
Oh, I hadn't seen that. That's interesting.
Yeah. And so like I think and there's a very persuasive voting block as well. I mean, they really care about this one issue. And so I think that Warren and Gensler were tapped on the shoulder and they were just like this anti-crypto agenda thing. It's basically a lose-lose. Like how does that help us at all? Because there's people that really love this stuff who will literally vote regardless of the party for somebody who accepts it. And there's people that might be annoyed by it. So if you came out and supported it, they might be like, that's annoying. I don't agree with this stuff. But they're not going to change their votes. But the people, if you come out against it, it's going to piss some people off and they might change their votes. And so I think they're just realizing that they made like, okay, we took this way too far and we have to at least show that we're kind of supportive. So you saw the senators go against party lines with SAB 121. That was kind of like the key point. He still hasn't vetoed that thing. He said he was going to veto it, and he still hasn't. So I think it was just a moment where they realized, like, whoa, this could actually make a meaningful difference in the upcoming election. And then suddenly, Bitcoin and I guess crypto more broadly has become a key political issue, like talking point in this election, which is just crazy to think about.
I've seen a lot of people say like, oh, well, it's Trump, you know. Whatever he says doesn't mean there's going to be any actual action on the back end of that, even if he does become president. But like in my mind, that just does not matter. What matters is what is being spoken about, what is being blasted out to all of his millions of like diehard people who follow him and want him to win re-election. And what matters is the pivot and the perspective that his opponents are taking and having to take because of all of this. I mean, what Bitcoin needs more than anything is, in terms of growing adoption, is just awareness and being part of the conversation. And it gradually gets there. And then when the price runs up, we see a huge influx of new interest in it. But if you have it as a key part of the election cycle and something that's going to have so many eyes on it in the next year, I just don't see how that's not beneficial for Bitcoin, generally speaking, even if he gets into office and, you know, none of those promises ever like actually have any follow through to them.
Yeah, I don't think it matters either. And it's like you said, it's just a game theory playing out. But some of the things he said, which is like, I'm going to protect self-custody.
Huge.
I mean, somebody's in his ear. I mean, this isn't just like for him to even know that word. It's just it's phenomenal to hear. I mean,
yeah, it came out so naturally too, didn't it?
How can you be bearish on that?
Yeah. So somebody's in his ear. You know, David Bailey's been out on X talking about that. So it sounds like that's where it's coming from. And if that's the case, like much respect. You know, that's amazing. Self custody is obviously such an important issue to me and what we do here at Unchained. But it really is core to the use case of Bitcoin as actually strong, sound money, is having the ability to hold on to it and do that yourself instead of delegating that to a custodian and relying on them being there, right? If that's how things play out and we no longer have the option for self-custody, it's going to be a much longer road to hoe to get widespread Bitcoin adoption in the US or around the world, right? Like the road will just be much longer if we have to fight that battle.
Well, I mean, one of the things that are obvious with some of these developments is that Wall Street wants in on this. Like they've seen the success of these Bitcoin ETFs. I mean, shatter records in terms of launches with assets under management. And they've been basically frozen out of it because of this SAB 121 rule. They haven't been able to make money off it, and they want to make some money off it. And what Wall Street wants, Wall Street gets. And so I think, you know, they're a really powerful lobby in Washington. But like, so
I mean, that was so evidenced by the fact that as soon as BlackRock like came into the ring, the whole thing shifted, right?
The whole thing
shifted.
Whole thing.
They
I
put their
mean,
thumb on the scale, and it was game over.
game over, game over. And like there was even a letter written to the SEC basically saying, hey, overturn this rule. Like we want, at least for spot Bitcoin ETF products and other things, we want access to these things. And it was like the American Banking Association, some of these large special interest groups penned this letter to him basically saying, let us in. And he didn't do that. And then, basically went to the vote and was overturned. But it just shows that they want in. And so what are some of the risks of those? Because, with this ETH, it just seems like we are going to get into the situation where Wall Street basically, hey, buy my products, buy these centralized products that aren't necessarily real Bitcoin, right? They're not spot Bitcoin. You don't hold your own keys. How do we get that message out, the importance of it? And do you think there's a silver lining to that? Do you think there's risks? Like, let's delve into that a little bit.
I mean, I think the Bitcoin ETF is hugely beneficial and bullish for Bitcoin, generally speaking. Like, there's no way that we go with this asset from what it has been in the past to global adoption without this type of transition. At some point, an ETF maybe becomes a little bit redundant if Bitcoin is actually global money, because why would you be using global money and then lock it up in an ETF? That just doesn't really make any sense, but seems perfectly normal and necessary as an adoption mechanism here in the transition before we get to that global money status. I think it's absolutely critical that we maintain the ability for people to self-custody their Bitcoin. From a legal standpoint, that's, it's again, we don't want to have that fight if we can help it. Bitcoin doesn't die if self-custody were to be outlawed in the US or something, but it definitely makes things a lot more difficult for the people who, people like me and the people like the clients of Unchained, who are, they understand the value of being able to control the asset. They understand that the value of the asset is such because they are able to control it. It is really foundational to the use case of Bitcoin and why it has value. And so I think there is this risk of too much centralization in the ETFs, but I don't think that risk is actually all that high. I think people like you and Swan and people like Unchained and the wider industry around Bitcoin who have been here, we're there to advocate for self-custody, help people when they're ready to take that next step and get into a position of power when it comes to actually owning this asset, right? Like it's great to get a little bit of exposure to the price, but you're missing out on all the other benefits of Bitcoin. And you only get those benefits if you're actually holding your own keys and controlling that. So that's what I think we have to be focused on is people come to the question of custody and the question of key ownership in their own due time. We have to continue to advocate and be educational in our approach there, and then have the tools and the educational tools available to make it easy for people to take that next step when they're ready.
Yeah. Combination of education and then making it as easy as possible for them to do it.
And it's never been easier than it is right now. The tools that we have around collaborative custody, the hardware wallets that are being used, the mobile wallets, all of this infrastructure was basically nothing. Even toward the beginning of the last cycle, it was very, very immature. And in the last 4, 5, 6 years, we are night and day different in terms of what is available for people who want to take that next step, to make it easy for them to take away a lot of the risks that were seen in the past of people making mistakes and losing their Bitcoin and that kind of thing. A lot of those issues have been addressed, and we can only expect that that's going to continue to get better over the next few years. So there's really no excuse for people who want to take that next step to be able to do so. We just got to keep building.
Yeah. You can do it if you're on the fence. I promise.
I mean, if you can drive a car, you can hold your own Bitcoin keys.
I agree.
It's not that hard. And we've made it so much easier over the past few years.
Well, there's a Twitter troll. He always comes out. He's actually, I think he's a NIM, but I think he's a really smart guy in TradFi. I get the sense that he's a senior level guy in a TradFi at some respected firm. That's just over the years. That's just the sense I get. And his big qualm is like, well, look at all the lost keys. Look at all the lost Bitcoin. How can it be a good store of value, if people just lose their coins all the time? And I just like roll my eyes every single time. And I just talk about what you just said, like how much it's developed. Like back in the early days, Bitcoin was like wasn't worth a lot, so people were more careless with the coins.
Yeah.
But also like the solutions there, people literally had paper wallets, like pieces of paper. That was like the norm, right? And then they had the development of hardware wallets. Now we have collaborative custody solutions. It just gets more and more. There's more redundancy built in to kind of help people prevent the loss of keys. Even if you wanted to compare like custodial solutions for people who might not be ready, like back then you had like Mt. Gox and stuff. And now you have like, ones that are like SOC 1, SOC 2 audited. Like these are like, it's been a ton of improvements. And this guy just keeps harping about the same thing. And I'm like,
yeah,
silly
the
argument.
majority of Bitcoin that are like lost forever, that are unspendable, I think there's an estimate around like maybe 4 million coins or something. Well, 1 million of those are Satoshis. So we assume that those aren't coming back, but who knows? And the rest of those are really just in those early years where it was so difficult to self-custody, and Bitcoin had no value anyway. So people just really didn't care, like you were saying. That is not the case now. And I think like people losing Bitcoin to mistakes that make it unspendable is so few and far between now, right?
Yeah.
The way that people lose it otherwise is that they trust a custodian with it. They give it to BlockFi or Celsius because they've got this like still this like fiat notion of I need to earn yield on my Bitcoin. But the yield that you get on Bitcoin is like built into the fact that it's got limited supply and it's engineered to go up in value over time, right? So you don't need to do that. But when you take those types of like fiat risks with Bitcoin, that's where people are losing their Bitcoin to somebody else. And those keys are basically just being transferred to other people.
What are, from your position at Unchained, what's some more common mistakes people make besides, trusting a custodian just with their, let's just say like either a typical single sig setup, or we can even go to multi-sig, but what's just like common mistakes that people make that gets them into trouble when they're taking self-custody?
Yeah. People lose their Bitcoin much more to mistakes than they do like the $5 wrench attack. So that's one important thing to point out. Even though that $5 wrench attack feels a lot more visceral, it feels like something that you really need to focus a lot on. It's not really the case where people are losing Bitcoin to that. I think there's still a lot of education that we need to do. There's a lot of education built into our process as people are coming on board around just how do you handle this private key material. The beautiful thing about multi-sig and about this collaborative custody model is that there's no single point of failure. So you can actually make quite a few different mistakes, and some of our clients do this, and still have access to the Bitcoin because you've got fault tolerance built into it. So we provide as much of that education and ongoing support as we possibly can, but people still do make mistakes every once in a while, right? Like people don't necessarily understand the gravity of not taking a picture of the seed phrase and putting that in LastPass or some other password protection mechanism there. We have seen people lose Bitcoin because they put their seed phrase into a password protector, and that gets hacked. And people are just sweeping their funds. I've had a client who took a picture of, so our clients, this is a collaborative custody model. They're holding 2 of 3 keys and Unchained holds the 3rd. Any 2 out of the 3 of those are needed to move the Bitcoin, right? So with those 2 keys, you've got unilateral control of it as our client. You don't want to give that secret information to anybody else. I've had a client who took a picture of both of those, emailed them to his estate attorney and said, hey, can you hold on to these for me? And he didn't lose his Bitcoin, right? Because even having just those 2 keys is not enough information to be able to steal the funds. That the guy he sent them to probably not really up on how to use Bitcoin anyway, and couldn't have walked away with the funds anyway. But the point is like, this guy made like massive mistake, huge mistake. Multiple mistakes built into that. Like, don't take a picture of it. Don't email it. Don't email it to somebody who you don't fully 100% trust with your life. Like, all of that happened, and he was able to recover. So like, these types of things happen all the time.
Yeah, I'll never forget. I was helping an older family friend just set up like a hardware wallet, and we went through everything, told him everything, and then at the very end, I like turned my back, and then I look back, and he's just taking a picture of it, and I'm just like,
Yes.
I had to
No,
restart.
please,
I
don't
was
do
like,
it.
you gotta be kidding. Were you not listening? He's like, what? I just wanted to, I wanted to save it.
Yeah. Yeah.
I was like,
I have one client who, he was doing everything right. He had one key in his safe in his home and the backup seed phrase there. He had another one in a second secure location. His wife was going through the safe and like decided to throw out some things that she thought were just trash that could be thrown out. So she threw away a seed phrase. And if he was using single signature and that was only his only copy of that key, like the Bitcoin could be unrecoverable, right? It's not 100% sure that that's going to happen because maybe his device is still working, but it's like these types of mistakes can lose people's Bitcoin for them because he's using multisig. It wasn't a single point of failure. He called us up, we got him hooked up, and he's good to go, right? But that was a good lesson for him and for his wife as to like you got to take the protection of this information very seriously.
yeah, absolutely. And that's why collaborative custody, I mean, has its pros for sure. I mean, I think the more the better. That's why we had the Swan Vault too. I mean, it offers that redundancy for people that are human and they make mistakes sometimes. And so
we can't expect, right? Like playing devil's advocate. I think these people who harp on how hard it is for self custody and like this NIM that you're talking about is talking about, like there's a lot of truth to that. In that, one, there's a difference in mindset in that we are going to take responsibility for our money. We are going to it's kind of a different play on financial independence, but I'm going to own this asset and I'm going to truly own it. And that's how I want to approach my finances. That's how I want to approach my savings. I'm not going to trust somebody else with it. So you take that on, but you also can't assume that everybody who wants to take that on is going to not make mistakes. We are all human, and we need to build systems and processes in place that will protect us from those mistakes, protect us from doing things that we didn't intend to do, or from somebody coming into the house and stealing our safe or whatever the case is.
Yeah, well, now is probably a great time to double check your own setup, your own security. If we are about to see a major run up, it's always a good time to recheck things. And it gets me sick to my stomach thinking about losing the Bitcoin, because your whole life you'll have to just watch it go up and up and up and up. And you should just try to prevent that situation from happening, in my opinion.
Yeah. And if you still have that address or that wallet information, you could see it out there on like you could literally see your Bitcoin out there, unable to be moved.
Your number one goal should be preventing that life, because that would be a brutal existence.
Yeah. I think there's also this assumption from again this NIM that you're talking about, that oh yeah, well there's professionals out there who can do this a lot better than you, so you should just trust them with it. Well, I mean, history is replete with examples of people who did not do that well. And I know we're talking about BlackRock and Fidelity and these other like long-standing institutional players, but that does not mean it's immune from mistakes. That does not mean it's immune from something going wrong in the process there that would cause that Bitcoin to be lost or stolen from some type of inside job or whatever.
Central point of failure.
Yeah, I think it's absolutely the wrong assumption to make that it's safer with the professionals.
Yeah, I think that's I think that's wise. I wanted to ask you, just like finish up, just kind of a more broad question. I mean, we talked about this shift, and it seems like we have entered this new era of Bitcoin, if you will. I mean, it's kind of over the last year, 2 years, it feels different to me. But where do you think we are in this cycle? It's kind of strange because we've seen both Bitcoin be the leader, Whereas these other like secondary, I guess you'd call them major alts, or I don't even know what you call them. But like you've seen them kind of go flat, but then you've seen these like meme coins spike. And in past cycles, you usually see the meme coins. It goes in like you go Bitcoin and then these other altcoins, and then you see the meme coins spike at the end. That's typically what you see. But right now you have this like meme coins are spiking. There's like speculation, there's fervor elsewhere, and then you have Bitcoin just kind of dominating in a way. It's kind of a strange in terms of like trying to figure out where we are in the cycle. So what's your take? Like, do you think we're still early? Do you think, we're midway through?
I think that's an indication that there's a large decoupling actually happening in people's mind for Bitcoin as being Bitcoin and what it is. And then all this other stuff is just kind of like speculative mania and, gambling. And, it's perfectly fine for people who want to gamble. Like I don't blame you for wanting to try to turn $100 into 10 million or whatever. Right. Like, you probably shouldn't do that with the entire portfolio that you're doing, but go have fun. Right. But I think there's absolutely recognition that Bitcoin is here to stay and is something to be taken very seriously. The Ethereum side of this and the Ethereum ETF, I don't really think that has as big of a bang, especially over a medium to long-term time horizon as Bitcoin will. I think we're just kind of in this cycle of pump what you can, make those fees, but the fundamentals are still at play here. And Ethereum is going to continue to bleed out versus Bitcoin over the long term, in terms of its valuation. In terms of like the cycle itself, I think we're so early still. I don't know about you, but I have very few people in my like normal social circle outside of the Bitcoin world asking me about it. Every once in a while, hey, how's crypto going or whatever, but it's very few who are like asking me how to buy it, and doing all of that. Like retail has not arrived. The institutions really haven't arrived yet. We're maybe starting to see the inkling of that come into play, but we're still so early in this cycle.
I agree. I think we are very early. I don't think retail more broadly is here, or at least like
no way.
No new entrants, I would say. And the first wave of ETF buying was mostly retail investors. I think it just takes time for these institutional investors to wrap their heads around. There's like due diligence they have to do from a compliance standpoint on any kind of new ETF products. It just takes time, which makes me extremely bullish. And you're just starting to see like these MicroStrategy copycats come out now.
Yeah.
And a lot of these companies are sitting on a lot of cash. And I think they're going to continue to start to, like, the light bulb's going to go off, especially when you look at MicroStrategy and the stock performance there, and they start to ask questions like, what the heck's going on over there?
Yeah, it's one thing to have one eccentric dude who's out there like buying up a bunch of Bitcoin and taking on debt and leveraging the capital markets to, build this massive position in MicroStrategy. It's a whole other thing if there start to become these copycats who are doing very much similar strategy and are also performing very well. Like that starts to become something that CEOs and boards of directors can't ignore. They have to start at least asking the question, hey, should we consider doing something like this? Should we maybe dip our toe in? It can't be called an anomaly anymore, or, oh, this guy got lucky after multiple companies are doing the same thing.
Yeah, no, pension funds. I mean, it just starts again. It's the game theory. It's the awareness. It's just like trickles, but then turns into a flood pretty quick. And so I do think we're really early. And the fact of the matter is, we're still hovering around the previous all-time high. To me, like the bull run really gets started when you kind of break that with momentum, and you really get into price discovery. Right now, we're just kind of consolidating around the previous all-time high. And so I know it kind of feels like we've had this crazy big rally over the last year, and it's gone up from like 17,000 to where we are now. But really, I don't even think, I think if you're here and you've enjoyed that, like good for you. But I still think we have a ways away in terms of this cycle, which gets me excited.
Yeah, absolutely. We're going so much higher. Do we break the cycle of lower returns, you think, or is it still going to be like maybe a 4 or 5x from here?
Look, I get
instead of like a
the
20x.
thesis, but it's hard when you know it's like we're getting into this next level of like capital and these money managers who have so much capital to dispense. It's just like you could see how that could break a little bit. Also, I can see both sides of the coin being just like the law of large numbers, and it just to double a market cap that's already at 1.4 trillion just takes a lot of money. I get it, but at the same time, we're so early in terms of corporate adoption, institutional adoption, um, you know, state adoption. Like, who knows what we could see? Sovereign wealth funds. There's so much fiat out there, and Bitcoin is such a small asset that I think you could see that trend break a little bit. But I'd
Yeah,
love to hear your
it
thoughts.
really is like trying to shove the ocean into a garden hose, right? Like
Yeah.
there's no way that that works unless you massively expand the size of that hose.
I know. Yeah. So, I mean, I would love to get your thoughts. It just, we are entering this new era, and if it could get a little bit crazy, I think.
Yeah, I'm a fan of the stock to FOMO model. I think that's my favorite
Sucks.
one. I think that one is going to be what most maps to reality. That you reach an inflection point where it just feeds on itself and cannot be stopped. It's that gradually then suddenly moment. And suddenly probably happens over the course of a decade, but it's going to feel like a much more compressed timeline than what people are expecting. And I think it's going to take a lot of people by surprise. I think one of the biggest dark horses that Bitcoin has going for it is actually on the energy side, and mining being incorporated into the energy producers and the energy infrastructure around the world. I think very few people see that coming in like the normal world out there. And but 10 years from now, we're going to look back and see that every major energy producer has Bitcoin mining in some way, shape, or form incorporated into their infrastructure, into their operations. And then once you have mining incorporated into the energy infrastructure across the world, it's so impossible to extract it back out because the synergies and the incentives are just too strong to ignore.
Yeah, I mean, we just saw Marathon sign a deal with Kenya to basically use like underused energy for Bitcoin mining. I mean, like deals like that, they should grab your attention. And I agree completely in terms of the Bitcoin mining, because there's so much misinformation over the years about Bitcoin's energy use and why it's bad. When really, I think as Bitcoiners, we know that it can actually provide all these benefits to the energy industry, and it's actually one of its biggest pros for proof of work for so many different reasons why energy kind of underlies how Bitcoin functions. It's one of
Yeah,
the reasons why
I
I
know a
got
lot of the
interested into it. Yeah, it's
I
amazing.
know a lot of the energy FUD has calmed down since the BlackRock, again, put their thumb on the scale. Do you think they understand the energy implications here? Because I don't know exactly what the numbers are, but they have massive interests in energy infrastructure and in energy companies across the world.
I think so. I think it's just such a big organization. I think some people, yes, it has to, like, some people have to like understand Bitcoin and why the energy component is actually a positive and why it's one of its strengths. But I do think there's probably going to be a lot of narrative around, comparing proof of stake and how it's 99% like whatever energy clean. I don't even know what the phrase they say. Um, I think that's going to be a narrative that unfortunately is going to resurface here after these spot Ethereum ETFs have been approved about how proof of stake is less wasteful. You're going to start to hear that. And it's going to be up to us to kind of educate people about why proof of work is so important to Bitcoin's integrity. And, it makes it difficult to produce. It makes coming to consensus occur in a way that's very fair. The distribution of new coins, it's a very fair way to do things in terms of just how the system's designed. And why proof of stake, there's a lot of more risks. It's not as secure. You're kind of depending on voting. There's risks of collusion, and it's just
I mean, it's just circular logic.
it's the circular logic. Exactly. So like, I think, unfortunately, I think BlackRock might, there's going to be narratives like that coming out of them as well, because they're going to want to make money off those other products too. especially if we have more than one ETF of multiple proof of stake networks, of how it's quote unquote competing with, Bitcoin, even though I don't even consider them the same asset class. Really, they're completely different value propositions. One's, they're like technologies, the other one's money. But anyway, long story short,
I'm
think
probably wrong, but
yeah,
I don't think I see that proof of stake argument really coming back and being perpetrated by BlackRock. I don't know. It just, again, Bitcoin is like etching itself as something that is completely different than everything else. I don't think people are going to be questioning proof of work versus proof of stake for trying to move Bitcoin there or adopt something else in its place. I don't know. I'm probably wrong.
I hope so. No, I hope you're right. I hope you're right. It would be great if we didn't have to go down that rabbit hole again, because it really is. It's what makes Bitcoin special, and it is so different. Like, that's why I'm like, it's so different. It's such a different technology, different consensus mechanism, different value proposition, different goals, different community. I mean, you could just go down the list. They just should not even be. They should not be conflated with one another at all. And so I think over the last 2-3 years, the community has done a lot of work to try to separate that, and the crypto community more broadly has done a lot of harm to themselves to kind of like really make Bitcoin's value proposition shine of how it is different. With the explosions of FTX and all these other ones, most of it was allowed to occur because of their own tokens involved. So, I think hopefully you're right. Hopefully you're right. I think that's the optimistic view. Maybe I'm being a little bit cynical on that point.
I'm about as cynical as they come, but I'm optimistic, man. We're gonna win. We're gonna win here.
All right. Last thing I want to talk about is golf.
Yes.
We're both big golfers. Actually, one of the questions that I got on here when I asked for questions was from my friend Lane at Swan. I don't know if you know Lane. He's a great dude.
I think I saw that question.
Talking about risk reward of a par 5, 480 yards, slight downwind, forced to carry over water. How are you playing it? But I would love to hear just like what you like about golf. I know you're throwing a golf event, or some of your friends are throwing a golf event in Nashville as well that you want to bring up. So what has golf taught you about Bitcoin or vice versa? And then maybe let's talk about that event a little bit.
Yeah, golf and Bitcoin have a lot of overlap. You cannot be a good golfer, and I'm not claiming to be a good golfer. I'm a decent golfer, but you cannot be a good golfer without proof of work, without hashing it out on the driving range day after day, and hitting your target, so to speak. Golf is like very low tie preference type of sport. It's something that you can play for basically your entire life as long as you can stand. You can play golf. It is very much like something that takes a lot of mental capacity as well. There's a lot of like deep thought that goes into a round of golf and how you approach the course. There's a lot of volatility in anybody's golf game. Not only how you swing the club from day to day, but also like the weather patterns and the way the golf course is playing on day-to-day basis kind of mimics the volatility that you see in the adoption of Bitcoin over the last 15 years. And we're probably going to see a lot more volatility over the next 15 years as we kind of take this into this next phase shift. But yeah, golf, I just see it as like this beautiful game that has all of these low time preference characteristics to it that you have to apply proof of work to. And the same thing is true of Bitcoin, right? It is the most low time preference asset that you can own. It is the best asset that you can own. It takes proof of work to understand it, to understand what you own, to hold on to it through all of that volatility, and to keep a level head there. And then, when you get to the end of that time, when you've reached your FIRE goal, and Bitcoin has been a key part of that, you'll look back and have a beer and say, "Oh man, what a great day to play golf." I'm stretching here a lot. What'd you say?
I said maybe buy some sick new clubs too.
Yeah, exactly right. Well, yes. And so I got to throw in a plug here for the Bitcoin Golf Championship. This is happening on the Wednesday before the conference in Nashville this year. I think that's July 24th. Unchained is sponsoring the 18th hole. So there'll be a little bit of swag in your bag there if you're able to make it out. But go to bitcoingolfchampionship.com, get your tickets. It's going to be a great day.
Yeah, I'm actually playing too, and I'm ridiculously excited about it.
It's going to be a lot of fun. It's going to be a lot of fun.
I'm really pumped. Well, Trey, thanks for the convo. I really appreciate you coming on. Where can people find you if they want to just follow your work and or social media?
At TS_HODL was on the screen there. There you go. And you can find me on LinkedIn as well, Trey Sellers. I've got a personal website. I've got an article that I wrote about Bitcoin and FIRE. It's called Bitcoin is FIRE Friendly. And it's meant to address the FIRE proponents and their kind of FUD around why they don't really accept Bitcoin and why they should. So definitely worth a read there. That's treysellers.com. And then check out Unchained, unchained.com. We are Bitcoin integrated financial services and love helping people to hold their own keys and make sure that they're in a good position for their family to pass on this generational wealth to the next generation.
Oh yeah. Yeah. And I, +1 on that article. It's a good article. So go check it out. Maybe
Thank you. Appreciate that.
Notes. Cool, Trey. Well, until we see each other in person, man, keep practicing on the driving range.
Absolutely. Hash it out, man. Hash it out.
All right, man. Have a great day.
Thanks, Sam.
Well, thanks for listening. Thanks for Trey for coming on. I really appreciate it. I hope you guys enjoyed it. Let me know what you thought. Like it, comment, subscribe to this YouTube channel if you haven't already. That helps us get the Bitcoin message out to more and more people. Check out Pacific Bitcoin. That's the festival we put on October 18th and 19th in Santa Monica. Use the promo code SIGNAL for 10% off your ticket. And if you use Bitcoin, you get an additional 21% off. And then remember, the next 10K you buy through Swan, there's no fees. So now's your time to stack sats without any fees. There's nothing better than that. Or if you're an existing Swan customer, your next 10,000, also no fees. So now's the time. Stack some sats. I think it's a good time anyway. I mean, if you listen to Trey and I today, we're pretty bullish and we think this is pretty early in the cycle. And that's just our opinion. But yeah, it seems like that way. I mean, if you just look at the past cycles, look at the retail interest now, look at what these developments that's going on at the political level, institutional level. It's a lot of reasons to get excited. And I still think there's a lot of rooms to go. So no fees, stack some sats. And that's it for today's show. We got another great one lined up next week. Thanks again for listening. Always appreciate everybody who tunes in to Swan Signal Live. And that's it. I'm out. Thanks.